Hello everyone, welcome back to my YouTube channel. And today we are going to discuss about accounting cycle and what are all the steps that are involved in the accounting cycle. So let's get started. The first and the foremost step of accounting cycle is to identify the transaction. What are all the transaction that is happening in the organization? That is, what are all the transaction that is relating to money inflow and money outflow? Only those transactions are first identified, right? So, why it is necessary for them to identify? Only then we'll be able to understand whether there is any profit that is actually occurring in the organization. Is the targets of the organization achieved? Only then we'll be able to understand that, right? So the first step is to identify the transaction. The second step is to journalize. Journalizing is nothing but marking down all the transactions in a book. That book is called as a journal, right? Okay, and that process is called as journalizing. You are marking it somewhere in the book. That process is called as journalizing, right? So it will be done in a chronological order. Chronological order is that in a date wise orderly manner it will be marked. Okay, so that process is called as journalizing. What is the next step? The next step is to post it in the ledger. Ledger means it is again a book where the journalized transactions are now segregated into common groups. Okay, they are segregated into common groups and made as a format now, right? So after journalizing, the next step is to formulate all the transactions into their particular branches. For example, all the cash transactions shall be classified into cash ledger. Okay, all the purchases shall be classified into purchases. Similarly, everything shall be classified in their own category. Okay, that step is called as posting of ledger. They'll be further balanced and they will brought it into and they'll be taken to trial balance. Okay, they'll be creating a balance for each item in the ledger. Okay, for example, cash is a asset wherein it has a debit balance. For example, salaries is an expense, so it contains debit balance. Like this, it will be posted to the trial balance. Why are we posting it to the trial balance? So that it will ease the process to prepare the financial statement. That is why we are summarizing whatever that has happened in the ledger into a trial balance. Okay. And now finally we are going to post it in the financial statement. Financial statement broadly can be classified as trading, P&L and balance sheet, right? There are furthermore additions to the financial statement, but these three are very important. Okay, the first one is trading account. Trading account deals with all the direct expenses and direct revenue, right? That is relating to the product or a service that is provided by the manufacturing industry. Okay, so it is entirely related to the product directly, which is affecting the business. That is mentioned in the trading account. And P&L account deals all the indirect expense and the indirect revenue. Okay, so all those transactions will finally be clubbed in the P&L account. Okay, and what is balance sheet? Balance sheet contains assets, liability and owner's equity. Okay, assets of the business, liability of the business and owner's equity, that is the shareholding of the owners. Okay, all these are noted down in the balance sheet. So I hope the cycle is clear. It starts with identification of transaction and it has been journalized and then it has been posted and balanced in the ledger. Further, the balances are transferred to a format called as trial balance, and from there we prepare the financial statement, which are classified as trading, P&L and balance sheet. I hope the video was helpful. Thank you so much for watching my video. Subscribe for more videos.